So TSMC, the semiconductor manufacturing giant, just reported earnings this morning. And I want to say if you are a semiconductor investor, they did answer 5 questions that we all should know. So let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So we can see stock price was up roughly 3.9%, almost 4% up today, and it definitely was a great day for investors. Originally, we can see the stock price started red, just like most of the market, but then kind of trickled its way up to a nice return. So I think the first question investors want to know about the semiconductor market is there really a slowdown? Especially when we take a closer look at net revenue in forms of US dollars was up almost 36% year over year and was up 11% quarter over quarter. If we take a closer look at those numbers, we can see that, hey, maybe there might not be a slowdown like everyone is talking. I mean, if we take a closer look at the revenue by platforms, we can see smartphone was up 25% quarter over quarter, Internet of Things was up 33%, even high performance computing was up 4% quarter over quarter, and high performance computing was such a huge growth last quarter alone. So first, TSMC does mention that they expect some form of slowdown happening in the market. For example, for the upcoming quarter, they expect only a 0.4% growth quarter over quarter. They also continue to see heavy decrease in the consumer market, so that's usually the smartphone and also kind of laptops and desktops, and that's what we've seen kind of with the overall PC shipment decreasing. Finally, they do mention that there's still super strength in the data center market and in the automotive market, but they want to be somewhat conservative and say that there is the possibility that some of those customers can kind of slow down. So we can see most of the slowdown right now in the semiconductor market is more consumer dependent opposed to enterprise and big player spending. So I think a great number 2 question is, how long will this slowdown last? So they do mention that they expect the semiconductor supply chain inventory to peak in the 3rd quarter this year and to start to reduce in the 4th quarter this year. So what does that mean? Let's say I was a PC maker. First, I would see that I would have a nice amount of inventory right now. And with this all talks of kind of recession and consumer spending decreasing, what I would do is, hey, start selling my inventory as fast as possible and also sell it at maybe at a cheaper price, some form of strong discount. So my inventory levels will drop. What I would like them to do is drop at a very, very low level. Eventually, they're going to drop at such a low level that I, as a kind of PC maker, will have to go back to kind of TSM and be like, hey, we need more components, we need more chips in our products. So then inventories will go back to normal level. So TSMC believes that they peak in the 3rd quarter this year and they start to reduce in the 4th quarter, and it will take a few quarters through the first half of 2023 to rebalance to healthier levels. So I do want to say, as the stock market is more of a forward investment tool, this is the information that kind of drives the market, right? So it does seem like the PC market, like the overall kind of semiconductor market, is expected to start pulling back in the 2nd half of 2023. And if you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. So the 3rd and 4th questions are pretty much about margins. First is, how will the United States regulations affect margins for a company like TSM? Unfortunately, TSM says that right now this is such a moving piece that it's too early to tell. The 4th question is, how will international expansion kind of affect margins for a company like TSM? If we take a closer look at their gross margins, we can see this quarter and last quarter were pretty high. This quarter was 60.4. Last quarter was 59.1, but a year ago it was roughly 51.3. The main reason is the overall shortage has kind of allowed TSM to kind of be working at full production. This kind of increases margins a nice amount, and obviously with average selling price also increasing, it increases gross margins for a company like TSM. TSM does mention that the initial cost of overseas fabs are indeed higher than those in Taiwan, and it's mainly because of higher labor costs in different layers of the supply chain. But they do believe that they continue to earn the proper return and delivered the long-term gross margins of 53% and higher. So we can see this year is definitely kind of an outlier for them with these high 50s, low 60% margins. We should expect them in the upcoming years to drop down a little bit and get closer to that mid 50 gross margins. The fifth question is, why is this company slowing down on capital expenditure? And this is a big topic because it definitely influences a lot of semiconductor companies, especially in the equipment like ASML, like AMET, we saw that earlier today in my earlier episode. So 3 months ago, TSMC mentioned that Capex was going to be closer to the lower end of their range. Their range was originally 40 to 44 billion. So 3 months ago, they mentioned that, hey, it's going to be closer to 40 billion. During this earnings call, they mentioned that it's actually going to be closer to 36 billion. So that's a huge drop, right? And many investors might be worried and might be seeing this as the proof that there is an ultimate slowdown happening in the semiconductor market. First thing is, they do mention that there is 2 major reasons for the slowdown in Capex. The first half is actually affected because equipment still is in supply chain issues and it's taking a longer time for them to get certain equipment and certain tools. So that's affecting half of the Capex reduction. The other half, it has to do with overall the slowdown, and they don't want to kind of overcreate more supply lines if the overall market is slowing down right now in the short term of things. But they do mention if things go back up, they will obviously start investing heavily on those supply lines as well. Another important thing, they mentioned that 70 to 80% of their budget is actually being used for advanced technology. So we can see TSM, even though it is a manufacturing company, is a company that's focusing on technology and innovating every step of the way. So at the end of the day, with these overall thoughts, I'm still super bullish in the semiconductor market. We can definitely see that short-term pain, at least for the next 6-7 months from now, maybe even 8 months. But I do believe that the overall semiconductor market has numerous tailwinds behind it that, for me, I'm still super excited to hold companies in this market. Let me know what are your thoughts. Take care, have a good day, and see you next time.